$12 million a month profit taking only one trade. Most people are naive, or I would say rather stupid. They don't really want to listen the real individual investors that are on the market that are like themselves, like me, right? They're rather gonna go and listen Yahoo Finance, Bloomberg, the BlackRocks of the world, thinking that they're actually getting some alpha, some insider information or knowledge about the market. Well, you're kind of wrong. You kind of remind me of the women who fall under the same situation, believing the bad boys in the world of dating, and they're having super bad experience, being lied to, cheat on, or single mother left to the rest of their lives. This is how you're gonna end up losing all your money, following all the news finance channels, all the big boys on Wall Street. They really have no interest explaining to you how the market works. And if you look, since the Wall Street enters each and every money making scheme, money making scheme is no longer working. People who trade crypto before Coinbase establishment, before Bitcoin ETF, before Ethereum ETF, before the government reserves, before this, before that, crypto market was very, very fun. Anyone could, you know, make money trading whatever they want because it was between individual investors. The market was kind of fair. Sure, you could always be someone with substantial technological advancements. People were building some bots, some trading, alternative trading systems, but still was relatively easy. Now we have money marketing firms, Wall Street, are money making the actual crypto transactions. Same thing happened with the stock market for many, many years. All the orders are effectively executed off the market, which is not making the market more fair. You need to understand the market is structured and definitely organized against you. Why? Even if you don't want to do that, let's say you have your 9 to 5 work, let's say you have 401k. Your 401k, your retirement investments are strictly forced to buy into either Fidelity, BlackRock, or the ETFs, whatever. So retirement funds are forced to invest your money into very particular investment baskets, very particular asset classes. This is the same scenario what happened with the IPO of SpaceX. $1 trillion IPO, there is no $1 trillion on the market, new money to buy into this IPO. So what they're going to do, they forced a lot of retirement funds to actually buy into, get a chunk out of this IPO on the open market, so they will be able to essentially sell the shares. You to understand that the structure is something that cannot be changed, right? But if you follow your own investment ideas, you kind of put on the side, you kind of protecting yourself, you kind of building your own, individual, semi-independent trading mechanisms. Because if you're not hopping on the trend, you're not actually trying to become, target for Wall Street. But like I said, most people are simply so naive. They think that Wall Street is going to give them the answers. Wall Street is taking care of the price action. They always think that when you try to sell, there's always going to be someone on the market to buy whatever you hold, or vice versa, which is not the case. Remember, if you get rich, you most likely won't be a client of Wall Street anymore. If you get rich, you most likely won't be able to contribute to the volumes. You're not going to be buying and selling. You're not going to be paying fees for management. If you're smart enough, you most likely you're not going to be using any asset manager. You're not going to be using any wealth manager. Most likely, you're not going to be looking of the terms and conditions of all of these hedge funds were kept locking up funds. They put new terms and conditions updates. We suspect withdrawals. The market is going bust, but you cannot withdraw your funds. Otherwise, you're gonna get fined 3%, 5%, 10%. Right? You need to understand the very, 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 very rich people. They don't need all these smart guys to tell them what to do with their money. Right? This is very unusual. How some of the people are still, kind of fall into the same trap. Because if you made some money on the market, you know what to buy. You know how to hedge your market position. You know how to escape the volatility. You know how to effectively, break down the position either on the buy or sell side to not move the markets. You know how to utilize the derivative market to hedge your original stock position, the equity position. Right? You know all these things. You don't have to. You don't have to run financial models. You don't have to, run simulation to see which one works and which doesn't. Start surrounding yourself with people like yourself. Don't surround yourself with people that are not like yourself. Don't surround yourself with people who are effectively distributing wealth, managing wealth, or people who are using complete different scale of investment portfolio, right? Just surround yourself with people like yourself. Use your own logic. Anyone now has AI, anyone can run different models, anyone can run different data. You have data points that are unique. You might pick the last 6 years of S&P 500, add the last 3 years of Nasdaq, last 2 years of Dow Jones, and then you can add some of the technology indices from Asia, and then you can summarize and look which particular indices are kind of linked. Is there a cyclical moves that you can actually predict? Because today, as you can see, we have Meta stock down, we have crypto stocks down, we have S&P 500 up, we have VIX down, we have oil prices down, we have gold up, we have silver down. Snow freaking correlation, which prior, if you take all the same example tickers I just gave you, you will see a very fine line between the prices of each one, kind of interconnected, moving up or down based on the opposite signals. But now nothing works like that. So everyone can build its own model that helps him to identify potential underpriced assets, overvalued assets. The other day I was running a model shorting $100 million worth of Bitcoin with 1000x leverage of 100k position original, put it as a collateral. And I took an average of how many percentage every single month Bitcoin has seen decline since January. On average, Bitcoin has seen a decline of 12%. So this 1000% X leverage de facto will give you around $12 million a month profit, taking only one trade. So now you will be sitting where end of June, we'll be seeing over $70 million in profits trading Bitcoin alone. You have to look at the markets, AI nonsense, overhype max 7. No. Focus on one thing, run one model, and keep updating the data points. Right? I used completely different data points from the Bitcoin ETFs, inflows, outflows. I use completely different data points from my personal trading history, the position sizing, the collateral ratio between the actual fees that are associated with the borrowing. If you borrow on 50x, on 100x, on 500x, on 1000x, you have different fees, you have different risk measurement. So when you have unique data points, you're capable to have unique results. No one, I guarantee you, no one had this particular strategy short in Bitcoin, $100 million positions since January. No one had made $70 million with only $100,000 original investment put up as a collateral in utilizing the 1000x leverage. Remember, being unique is your own leverage that cannot be taken, cannot be replicated. No one can replicate your strategy because it's yours. You come up with it. They're not in your mind, they're not in your computer, they're not in your AI model.